And let's move on then to NSE's electricity futures that are in focus. And to weigh in on the roadmap for expanding electricity derivatives, we are joined by Harish Ahuja, Head Issuer Relationship and PSD Power and Carbon Markets, NSE, to know more about NSE's roadmap on this expansion. Hi, Harish. Thank you so much for taking the time out and joining us. Tell us which participant category is driving the trades, firstly, the discoms, generators, traders, or the industrial users?
When we see the data, I mean, we cannot go precisely to the people, name, number, etc. But the way the broader category which are driving the markets, trader, industrial customer, and generator, in that order only. Discom participation is still to pick up.
Right. Also, Mr. Ahuja, what feedback has NSE received on the contract design and the lot size?
Nothing has changed in terms of lot size. Contract feedback has been very good. That's why we have got around 76 to 80% volume market share. I need to go into very specific of contract design. One contract means around 50 megawatt hour of lot size. One lot is equivalent to 50 megawatt hour. It is around 50,000 units. So any customer who's, and this I'm talking about the full month, 30 days, 24 hours. So if I talk about anyone who's consuming 70 kilowatt at a particular time, this particular person or particular company or service provider or manufacturing unit is eligible to hedge its complete price risk. This is one. So 50 megawatt hour, monthly contract, base load contract. Very important thing is our settlement price. Our monthly settlement price is a kind of aligned with national policy around one nation, one grid, one price. Our price is a unified price of all three exchanges, all three DAM segment, be it conventional power like hydro, thermal, be it green power DAM, and high price DAM. So when we calculate our price, which is settlement price for the future, we take care of all three exchanges, all the segments. It's kind of volume weighted average price of DAM, and we do the simple average. So that way our contract is very well designed, and this product has been accepted really well by the participant. Our only positive feedback, I will say, nothing negative. Margins are also reasonably okay because it's high volatility product. Well, margins are 10% of the lots, I mean the total contract size. So positive feedback only.
Okay. And Mr. Ahuja, what really differentiates the NSE's electricity futures?
See, I will talk about very specific product. NSE has the three key differentiation. One is definitely NSE being a kind of baby of Government of India in terms of when it was launched, in fact, way back in 1994. The very purpose of aligning it with national policy around how in fact, we like to develop the capital market. And when we designed the electricity future, we were very much keeping the national goals around electricity, the power market reform, and how the future market should develop in our mind. And that's why our prices are very much reflective of all the three exchanges, all the three segment of DAM, which gives a kind of unique proposition to the participant. This is one. Second, our clearing and settlement mechanism is very clear and very well established, because similar to NSE 50 index and Nifty 50 index, this also we are taking index price here, so we know how exactly this to be settled and clear, and that has been taken very well. And third key differentiation is, I told you that the rollout of the future products in terms of quarterly or month, yearly, or the CFDs would be very well aligned with how the power market develops, how the net zero transition expect from us the products, especially CFDs purely made for renewable energy generation. So when we see this product, we see it aligned with the Government of India policy. Secondly, we try to structure to give it a one standard price for all the segment. And third is, our clearing and risk management mechanism has been very robust and sound, so that participant can take bigger position without worrying about the price management risk.
Right, Mr. Ahuja, what steps are being taken to onboard more industrial consumers? Then what is the roadmap for expanding electricity derivatives options or more tenors?
That's a very important question. Thank you very much for asking this question, because I need to share some data points so that you can understand why this is a very important question, how industrial customers are going to play a very key role here. Since our inception at 14 July 2025 till let's say 31st October, if I see the volume has been roughly around you can say 3,16,000 lots, 15.98 billion units. I'm talking about futures, and these two numbers speak a lot about itself, So every day in a spot, which is nothing but day-ahead market, we do roughly 200 MUs, If you see the future, which is the electricity future of NSE, we do around same 200 MUs. I mean, 3 months, within 3 months, for a product to get liquidity equal to spot market is quite a rare, and without any too much promotion here, it was a kind of a product which was accepted by the industry itself, and here industrial customer will play a very important role because if you see my contract design, this contract design is very much helping the industrial customer having 70 kilowatt constant load. Most of the companies, most of the malls, most of the office places or manufacturing has minimum 70 kilowatt meter, minimum. And these are in lakhs, I would say. More than 1 lakh customer or more than 2 lakh customer would be having this kind of load requirement. This contract gives them a very specific hedge instrument, they can hedge their prices because, NSE has roughly 3,000 companies, roughly I'm saying around 2,900 companies are listed with us. These are big companies. And I'm talking about SMEs. SMEs are different, So SMEs and big companies, everyone has an PLN item electricity cost, and it costed minimum 7 to 9%. If any product which can offer them natural hedge, they will surely go for it. And I do believe industrial customers are the key to unlock the value here. That's why we are regularly interacting with industrial customer. We call them commercial industrial customer. We call them CNI customer. We are holding regular meetings with them. We are creating awareness session with them. In fact, some of them already start participating. That's why volumes are reasonably stable. And most important thing is when we interact with them, they say being a new product, we need a lot of understanding around how exactly the market works, how the future work, how the spot and future virtually move together, So what NSC has done, not only we are giving regular meetings, but we have launched a free electricity derivative certificate program for all the participants across the value chain so that they can, come study, learn, and it's very applied test, and we issue the certificate.
Also, can you explain with an example of how futures and spot pricing is aligned?
This development has happened recently, and I could see that the spot physical power market prices are very much aligning, or I would say the respecting the benchmark being set by NSE prices. A very live example is on 31st October, Damodar Valley Corporation, which is Government of India utility, discom utility, invited the auction, and in that auction, the price discovered, I will say L1 price discovered was 3 rupees 23 paisa per unit. And the same day, on the same time, NSE November future price was 3 rupees 23 paisa. The Damodar Valley Corporation wanted to buy roughly 127 million units from 5th November to 30th November. And NSE November prices for during that duration was exactly same. So the physical power markets are also treating NSE future prices as a benchmark and giving the allocation accordingly, which is a very good synchronicity between futures and spot. And I think country should really, really celebrate this kind of achievements.
Mr. Ahuja, thank you so much for taking the time out and joining us. We'll let you go on that note and move on to the next story that has